So this was on the Chinese tariff headline. We got positive stuff over the weekend, and then futures gapped up again when we got more details for the trade related stuff, right? With that, you kind of want to frame stuff as like consolidation mode or like try to buy first move downs. And like, yes, it is an A plus catalyst. You need to wait for setups, right? So on a day like that, what are the types of setups that could happen, right? You could either try to buy a first move down in a fast way, or you could wait for consolidation break. That's typically 2, 3 hours off the open towards the end of the day. That could be a really good setup. Or if we have a really fast move above the pre-market high, let's say Tesla broke this 323.50 and went to like 330, 332 straight off the open, that would be a great short given that volatility. For a day like this, when you gap up a lot, it's kind of tricky because you don't really have the potential to have a trend day when it gaps up that much. Like Q's gap up in a such big way, like Tesla's gaps up 8%. So you want to wait for that first move down trade, and that's how you don't really draw down that much. You try to scale into that. Same thing with the Amazon. And after that, the price action was just poor, and you could kind of take that off pretty much, you know? But I think with any type of trade where you're scaling in or buying like a first move down, like those are typically only worth 5% of your daily risk, even on a big like setup trade like that on that day, because that's not the best permutation for a good catalyst date that Monday. So you typically don't want to draw down too much, and I don't think you want to even risk 50% of a daily stop because it could pull back way further than you think, right? Something where you'd want to risk 50% of your daily stop on that day is, let's say we consolidate for hours, right? In a tight range. And then around like 2, 3 o'clock, we break that 23.50. That would be A plus on a day like that. And you probably see a very fast move into 330, if not higher, on something like Tesla. But for a first move down, it's kind of like adverse selection. It's something that you don't want to see, but at the same time, like it's good. And if it goes down further, you draw down more, but it's even better opportunity. So with those types of bets, you need to be very small and scale in faster and faster as it gets more aggressive. But once it's not really setting up so cleanly, you kind of have to ditch it quickly. Does that make sense? So if the thing is, yes, this is such a tight pre-market consolidation and maybe you'd want to buy that. I just think it gaps up way too much. Like the overall market cannot sustain a gap like that. Is like an 8% gap. Like Qs can physically not handle that. Like it's the chances that it gaps up and continues, especially after a really strong day on what the heck? Wednesday. Am I looking at the wrong day? That day, oh, sorry, Monday, May 12th. Yeah, the chances we have a trend day. I mean, I would say like, yeah, it's good that it's breaking out of the base, but we're kind of like at the top end of the Bollinger Band. We're gapping up a lot. The chances that we kind of like break that consolidation and trend up is just so small. I don't think you're going to get that type of action. You want to buy that first move down and like kind of scale into view up and then wait for like a later end of the day consolidation break. Does that make sense, Rick? How would you define a true turn or state we are now on the right side of the V? It took a couple of events, attempts on the cash strategy. So there's two things that you really want to see for the right side of the V, right? I talk about this concept a little bit. I think quite literally in terms of right side of the V as being like a trend. Like say this is a stock that's trending and this is our like V. Whatever is like in that range is considered right side of the V, right? Whenever you want to fade something like UNH, a Nvidia, whatever, like an exhaustion gap, you either want a capitulation outside of the mean or you want a series of lower highs and lower lows to start shorting that, right? So that's either like an opening range break or like a consolidation, a failed breakout outside the trend where it sort of capitulates, right? But if it consolidates lower and builds these like lower highs with lower lows, you could try to trade that overextension. So if we look at UNH the last few days, we're the two spots that kind of show up there, right? It's into here off the open, which I size like pretty big. We have obviously the daily chart aligning really well. It has that breakdown under the pre-market low and in pre-market, right? And then we move like 1 ATR down in a very fast way off the open, right? These are capitulation bars. The reason I know it's capitulation is I compare the size of these candles to its previous bars, right? And these are like 10 times greater than average. Even off the open, like these bars are massive. So when you get that sort of turn into there, that's your right side of the V in terms of capitulation, right? So that's spot number one where you want to take that, right? Obviously, you get stopped down on that. It doesn't work. So, what is the next sort of way you get involved? It's when you have a series of, I guess, higher highs and higher lows, essentially, right? So if you look on the 1 minute for this, where does that happen, right? We're in a consistent downtrend where we're making lower highs every single time, right? These are our lower highs, these are our lower lows, and we're just in a downtrend, right? When we shift and make our first higher low right into there, and then we make a higher high out of this base, the right side of the V is in this area here and this downtrend. And I like to use moving averages as well. This moving average is so consistent, gets really tight, and then sort of like shifts. And you can see like that uptrend starts to, like it literally starts into here. So that's the second spot where you want to take that. And then for today, another example is you want to take the opening range breaks essentially. And today we just didn't get that, right? If we had like intraday level that kind of aligned with that 285 in pre-market, maybe you buy that, right? But even today, like this first move down into yesterday's support levels around like 275, that's another capitulatory bar into here. Like this is a very fast move down this bar. After that, you kind of want to buy right side of the V into that. Does that answer your question? Same thing with this here, right? This sort of pukes out and has like a failed breakdown. Once it builds that higher low and higher high into there, it starts the uptrend. And you try to get the right side of the V that way. Perfect. Yeah. That's conceptually how I think of it. And if you captured that yesterday, you're right on the dot. So Ty asked, what made QBTS above 12 A plus? You know, Valk talked to me and he was mentioning the reasons why it was actually not A plus. The reasons why I thought it was A plus is because we were getting super tight near that all-time high at 12. We just like base out from, and it's something that a lot of shorts would get squeezed out of, and especially like intraday when you have like that daily chart get really tight on the top end of the range. That's something that I want to swing trade. I think the problems that Valk brought up though was whenever it is like a late stage runner and coming from like the middle part of the base, so like it starts at 7 and then gets to the highs, like 3-4 days of consolidation is not even enough for that. You might need like a week or so of consolidation, and this name is just not fundamentally very good and it's very short squeezy. So with that in mind, like we just had 2 failed breakouts in a row, and it's a little bit frustrating. You never really want to trade these names that have like fast spikes intraday like this. You really want it to be more tight and, you know, trend into that level and get tight intraday. And it never really did that. So that's why I think this failed. Our S&P 5 inclusions potential playbook trade, and how would you rate them? I would say it depends on how hot the name is. When you get something neglected like a Coinbase, PLTR was a really good one when it got included into the S&P 500. SMCI that ran see into here, that was a great day one in February, and it ran like a lot into that inclusion. What was another one? Tesla was by far the biggest one back in, forget when that was. I think it was somewhere around here, June 20th. Same thing with like stock splits. Stock splits on really hot stocks could cause a little bit of a run, but it's only when you have a really retail driven liquid leader. So think of something like a Tesla, a PLTR, Coinbase, SMCI. Those are all really liquid stocks, but they're very retail heavy. So if you get stock splits and S&P inclusions on them, you could get some really nice trades on them. Does that make sense? Yanni, can you talk about how to manage a lot of things setting up today? And the trend day at the open was not easy for me to identify, even with internals like tick and ADD. Do you have any advice on this? Thanks. So with the overall market having that big news that we talked about on Monday, what sets us up for a trend day is like holding above the day one high, and then also market internals and like market breadth, right? Even more important than tick and ADD is if you have a proliferation of a lot of setups, the chances that you're going to get a trend day that day is very high. When there's so many things that you can't even like keep track of which one you want to trade, there's so many things that look good. That is actually the biggest sign that you're going to have a trend day. And if those all get above the levels and at the same time, and you see a strong tick in ADD, that is by far the biggest indicator, right? And you have to identify that early before 10:30. So it's a combination of market news and the level, which, sets you up. And then it's a proliferation of setups, right? So we have that big gap up that gets digested for hours, right? On top of that Tuesday, we had good data that came out at 8:30, and we start to hold above that day one high, right? If you look at tick and ADD that day, that was what, Tuesday? Yeah, I mean, it was pretty positive. It started up high, and then for, most of the open, it doesn't get over the zero line. And you could look at it for the entire day. It was pretty much above that. Let's go back to that Tuesday. Yeah, I mean, for the open, it's pretty much above that the entire time. ADD was not even that high. But when you see a lot of names like Hood, PLTR, Tesla, all these market names starting to set up, and you're above that breakout high, you just break out of a consolidation. It's just a really good setup for that trend day. That's typically what you want to see. More so than ticking to ADD is you want a key level and a big market catalyst to kind of get you going, and a proliferation of setups. Does that make sense? Yes, for S&P 500 inclusions, you must have a hot stock. If it's something stupid that nobody cares about and it's not like a hot theme, like it's not going to get that much momentum. What is if you compare SMCI, Coinbase, Tesla, PLTR, all of those have really hot AI themes and they're like retail driven. And that's what makes them the best for these types of trades. Jay said lately you had some good calls before the open on Tesla, Uber, and PLTR and other big names. Can you discuss some of the fundamentals or other variables that gave you conviction on that for good day trades? That is on Wednesday. So if you look at, so typically you want to see what the market leaders are for these types of names. Like, how do you know what are the best breakout candidates for a trend day, right? I always look at relative strength and then also the laggards, right? In a very capitulatory market, you want to buy the laggards that could kind of capitulate and give you a good risk to reward, or try to get the things holding up the best, right? So if we look at the names that held up the best at this April sell-off, it's the same ones that we broke out and held with strength the entire time. So I think it comes down to just chart work and going through stuff that's holding up above like key moving averages on the daily and just setting a ton of alerts on them, right? So if you go through like the hottest names that are above the moving averages and holding up the best, those are the ones that are going to be the market leaders when the overall market turns. When the market starts to trend above these shorter term moving averages and we put in a low in the beginning of April, the best stocks are going to be the ones that trend the hardest. The relative strong ones are going to be the ones that trend the hardest, that held up and didn't sell off as much as the other ones on the down move. And that's how you find the liquid leaders. Exactly. Relative strength during times of weakness and relative weakness during times of strength. If you find the names that are the weakest during times of strength, when the market turns, those are the ones that are getting hit the absolute hardest lower. I can't even think of some relatively weak names that haven't rallied much. Maybe like Google. That's the only one that I could think of. And even that's starting to pick